China stocks saw their best rally in 16 years as recent economic stimulus measures boosted investor optimism. The Chinese markets now take a breather for the Golden Week and will resume trading on October 8th. Joining us right now is Kyle Bass, Hayman Capital Management founder and chief investment officer. You heard Mr. Tepper make the call, and you've seen the stock movement in China. You've been quite bearish on the country. I'm curious what you make of everything that's happened over the past week and a half.
Yeah, great to be here, Andrew. I think that, look, Tepper's one of the best hedge fund investors in the history of our markets, and he's a great trader. And, you know, we say something at our firm, we say, you know, you can't break your arm jumping out of the basement window. Chinese stocks have been up only 5 of the last 20 years. Their GDPs have 505% reportedly. And if you invested in their Shanghai Shenzhen 300 index 15 years aero, you're still not making money, even though stocks are up 25% in just a week. So you've got a policy-driven stimulus. You've got animal spirits arisen. But typically, the biggest rallies are counter-trend rallies. And China's trend has just been down for so many years, Andrew. And as they've shown as Xi Jinping has kind of shown his hand, investing in communism has never worked in the long run.
So your argument is this is a head fake? Is your argument that you would short it from here? Is your argument that maybe this goes on for another year or several months? What are you saying?
Sure. As far as the policy stimulus is concerned, they've talked about a $300 billion stimulus so far in a reportedly $20 trillion economy. So going into the Golden Week, going into National Holiday, they got stocks up. Think about this, Andrew, 25% in 1 week. And so is that a good time to buy something? I would argue that this has been a trading rally. It's been a massive counter trend rally. But, you know, look, think about 2014, think about many years before. Their stock market sits today where it was a year ago, where it was in 2016, where it was in 2009, where it was in 2006. That's exactly where we sit today. And so if their GDP is up 505% and you're still sitting where you were sitting back in 2006, I don't know, maybe you should consider not investing in communism. Do I think that the rally could continue? Do I think that stocks could go up more? The answer is yes, but I equate it to picking up dimes in front of bulldozers.
And therefore, you think that the move has been made and it's over already?
Yeah, I guess my view on this is simple. The United States has increased our GDP about 75% in 15 years. And if you invested in the S&P and reinvested dividends, you're up almost 400%. So you don't have to discount Xi Jinping. You don't have to discount the Communist Party. You don't have to worry about China going to war with the Philippines or Taiwan. You don't have to worry about their limitless partnership with Vladimir Putin and their partnership with the Ayatollah and their partnership with Kim Jong-un. You don't have to worry about this unholy alliance of bad guys in the world geopolitically. If you just invest here where we live, where we have the best, most deepest capital markets, we have the most innovation, we have the best companies in the world. All I'm saying is, as viewers of this show, think about the broader picture. Again, could a communist government goose its market a little more and make it go up? Absolutely. And if you're a trader, more power to you. If you invest in communism in the long run, you'll lose every time.
So you think it's a long run story, but I think the question for some of the folks who do watch this broadcast who are thinking maybe a little bit more short term, and I don't know if short term is a week, a month, or a year. David Tepper was sitting right over here, and he said not just to go buy, he said buy everything. Buy everything.
I mean, he is an amazing trader. I mean, and he's someone I respect wholly. And so, again, he's a professional investor too, Andrew. And so if you have all of the wherewithal to be long Chinese A shares and know which ones to buy, or if you just want to go trade an index, I mean, again, it's up 25% in a week. Be careful. But if the Chinese government follows through with fiscal stimulus and realizes that their economy is circling the drain, their youth unemployment crisis is exploding, their stock market or their banks are insolvent because of their real estate market, you know, if they stimulate, and they stimulate in a major way, you could still make some money being long. I just think it's a bad idea in the long run.
Kyle, can I throw in some of the geopolitical news that I think we're all grappling with, which is just the relationship between China and Iran, and how you think that plays out, and how you think it plays out in the larger picture of the rest of the world as it relates to China's economy?
Yeah, I mean, when you think about it purely economically, it's almost irrelevant, except for the fact that China imports, call it 12 to 13 million barrels of crude oil every day. They still import about 8.5 BCF of LNG every day. So China is still a big energy consumer. So when you think about geopolitical tensions, especially as it relates to Iran, and now you have, Israel moving in on a selective ground move in Lebanon, and again against Iranian proxies across the board. If this conflict expands into a broader regional conflict, which I think is, I don't want to say it's inevitable, it's highly probable, the relationship between Iran and China and Russia is one that we all must watch. And these madmen, the Ayatollah, Putin, Xi Jinping, they're all acting together. This is something that's very worrisome for the world, and I think it's very worrisome for political analysis and geopolitical analysts in the U.S. and the intelligence community. So this is not investing as usual. Again, one of the reasons why I say we should stick with investing in America and what we've got here. And I think, again, this conflict between Israel and Iran is likely to broaden going forward.